Welcome, Mike Rasmussen, CPA Straight Talk for Small Business. I just wanted to welcome you back. It's a Monday on September 14th, and I wanted to let you know today I'm going to be focused on business use of your home. Okay? So, not going to make this very detailed because, as you will see, the documentation from the IRS and how to do this, but there's just a lot of conflicting or information out there. There's a actual expense and a simplified method. Okay, I'm going to walk through both of those real briefly, but bottom line, what you really need to do is get the square footage of the exclusive use of your home, the exclusive regular that you use for your trade or business, and go through a worksheet. And so right off the bat, let me help you talk about how let me just show you how it works. So here is business use of your home. This is publication 587. You can read, it's a simple read, and just real quick, let's go down to page 2 and let me get you to qualifying deductions. So generally, you cannot deduct items related to your home, okay? Such as mortgage, interest, real estate taxes, utilities, maintenance, rent, or as business expenses. However, you might be able to deduct expenses related to the business use of part of your home, okay? So how is that actually calculated? Here we go. So you start right here. Is part of your home used and connected with a trade or business? Yes, no. Yes, you keep moving. No, no deduction. Yes, are you using the part of your home as an employee? Yes, no deduction, no. And why? If you're an employee, that is because as of in 2018 with the Tax Cut and Jobs Act that was implemented by Donald Trump, by the president, the miscellaneous itemized deductions went away for Schedule A. So that's where you normally would have taken that deduction, which is not available anymore. So no. Is the use regular and exclusive? I'll get into the definition of that. Yes. Is it your principal place of business? Yes. Deduction allowed? No. So then further, do you meet patients, clients, or customers in your home? Yes. Deduction allowed? No. Is it a separate structure? Yes. And if not a separate structure, then no deduction. That was pretty simple there on page 4 of the publication 587. Okay. So once you determine you're over here with the deduction allowed, then let me just talk to you just a little bit about exclusive use. And the easiest thing, to qualify, you must use a specific area of your home only for your trade or business. The area used for business can be a room or other separately identified space. The space does not need to be marked off by a permanent partition. You do not meet the requirements if you use the area in question for both business and for personal. So, for example, in my area, this whole upstairs is used exclusively for business. I come up in the morning, I do all my videos, YouTube's, Facebook, I do everything up here. So, this area, as I measure it out, is approximately 10 by 10, it's about 400 square feet, okay? So that is just this room, okay, that I exclusively use for business. And then it says regular. To qualify under the regular use test, you must use a specific area of your home for business on a regular basis. For me, it literally can be 24 hours a day, I'd pop up, but when I do business, I am in this environment. I have a desk, I have meeting chairs for people to come in. My staff actually comes in over here and uses that computer. So I have drinks right here in the refrigerator for clients that I come out. So this is a very active, this is my exclusive and regular, okay? And by the way, is my principal place. So it is my principal place of how I do business, okay? All right. So what is so important about it? Now, there are worksheets that this publication actually uses, okay? That are just really simple. that, and let me just type in real quick here. Let me just go down to the bottom and find you a worksheet. So here is the simplified worksheet. Now, there's the actual, which I'll get to, is where you actually put all your expenses together for related to your home based on your square footage, and then it's that percentage that you will actually take a deduction for a sole proprietor or self-employed on Schedule C, and I'll show you that. But there is a simplified worksheet, okay? Just focus on that. It is, and for all intents and purposes, it is just a number that is your square feet by $5 maximum allowed up to 300 square feet. So 300 times 5, that's $1,500. You don't have to keep records. You just absolutely have to have at least that much in expenses, and then what you can do is take that on your tax return. Outside of that, then what you have, this is what's called the area adjustment worksheet, and here is the area used for qualified business use, and that would be based on the square foot, like I talked about here, which is 400 square feet. If you had shared use, if you had multiply, so the maximum area I would be limited to would be 300, and then it would be 300 times the $5, which would be $1,500. Okay? That's the simplified method. Now, if you're going to use, you can actually see there are specific worksheets for daycare, and there are specific work for farming. What I'm going to show you right here is Form 8829. This is a real simple, it's a calculation that you must use if you're with a Schedule C. So Form 8829, here it talks about area used regularly and exclusively for business. That's what we talked about. In my case, it was 400. And then you divide that by the total area of your home, and then you get your deductions. I'm going to ignore diving into the deep into daycare facilities. If you have daycare, you really need to shoot me an email. You need to get your advisor involved, but that is much more specific. So let's just keep it general right now. So you enter the amount from Schedule C, line 29, and the reason why you do it is because you're limited to income or you carry it forward. So here is a Schedule C, and here it is tentative profit or loss. So you cannot have your business use of your home deduction cannot turn go negative. That's why you're entering it here up into, or it's just carried over. Okay, so then you go into figuring your deduction. Once you do that, you've got both direct, indirect expenses, and here you can see mortgage interest, real estate taxes, insurance, rent, repairs, and maintenance. You go through this whole complicated, but basically you're coming up with your allowable expenses for business use of your home, because it is, and all of the expenses you have for your home are then taken in proportion based on the percentage that you use, like 400 of 4,500. Okay, that's how the form works. You then take that number. Now, you can also depreciate your home as well with that same. There's pros and cons to that. Depreciating your home is if you actually sell it in the future, then you're going to have to pick up a gain for the amount that you depreciated. So just know that if you're depreciating for business use of your home, you're going to have to, for that piece that you actually depreciate and use here, you're going to have to keep track of it, the amount, and then treat that amount as gain in the future. Okay, and then of course you cannot take it, can't reduce your Schedule C below zero. And here's your carryover to 2020. And of course this is a 2019 form. Doing one of these right now for a couple taxpayers that have extended their returns to October 15th. So this is where we go and we plug in the numbers. So why is this really important? Well, it's not the actual deduction that you're going to find out. A lot of if you don't use the simplified method, there's paperwork, and there's documentation that you're going to have to keep to support Form 8829 going forward. But really why it's important is that now this, if you treat your and able to not only work from home as an employee and or it is your Schedule C for-profit business, Schedule F, and you now have turned your home into the starting point for car and truck expenses, which would be your automobile. So right here on Schedule C, when you have a home office deduction filled out right here, that supports the fact when your mileage here, when you're using it for what is the business percentage of your car and truck expenses, now your starting point is when you leave the garage, when you leave your home. Okay, so in the past, if you had an office downtown, you traveled 5 miles to your office, that mileage was actually commuting from your home to your office. Then from your office, as you did your day, as you ended up back at then back home. So that mileage from your home to your office, to and from, is not business mileage. Now what happens is that you now can back that up, and if you truly, your office has been shut down, or possibly, why do we keep documentation? Temporarily shut down, your business mileage starts from your home office. So that's not, it's a really a twofold benefit by claiming the home office. The car and truck expenses could be a much bigger deduction when you can start focusing in on taking your commuting out of the equation, and you legitimately have a home office here, and because this is where you're doing your business. Clients can come here. You can video conference. So you do got to be a little careful. So let me just give you a quick. Here is a couple articles. I go to the Journal of Accountancy here, and here it says a home office can meet the principal place of business even if the taxpayer doesn't spend most of his or her working day there, provided it's the only place used for administrative management activities. Well, that's important. For instance, a plumber earns most of his or her revenue on his job sites, but still can have a home office where client scheduling, bookkeeping, and business oversight occurs. The key to supporting a home office deduction is to show that it is the nerve center. That's what I wanted to get. Nerve center of the business, not just a convenience. A side benefit of qualifying a home as the principal place of business, the ability to treat travel between the home and work locations as a deductible business expense. That was what I was terming commuting from normally from your home to your work location. Okay, whether you're an employee or whether you're a business owner, Schedule C, and even whether you're a partner in a partnership, if that is a requirement in your operating agreement as a partnership that you have to have a home office, so these rules still apply. And again, this publication 587 will help you, determine which is the best way to go. So you can either do the actual method or you can do the simplified method. Form 8829, here is the actual method. And again, it's both based on square footage of your home and then that amount that you determine there. Either way is reported for a Schedule C on line 30 right here, whether you have the simplified method or you're using the total actual method. And either way, that home office deduction cannot take your income on line 25, your tentative profit, down to zero. And if it does, it carries it forward. But again, the most important, or one of the most important, I believe, yes, the home office deduction, it is establishing support for your mileage on car and truck expenses. It is allowing you to mileage and travel mileage from your home office and out in the world doing business. that starts then at your home office. So to kind of summarize, so how do you calculate mileage reimbursement for employees working from home? For those employees not required to go to the office location, so they're not required. So they've redone their HR manuals, okay? To the office location, document that they are serving at and for the convenience of the employer by working from their home location for the employer's business purposes. It's an important designation as it allows the principal place of employer business to transfer to the employee's home for the determination of reimbursable business miles, even though the usual office location is still open for other functions. So this is something that just needs to be documented by the employer, and in there what's called a countable reimbursement plan. I'll do another video on that, but for now that's just a plan that your employer has that you follow. You keep track of your expenses and get reimbursed by submission of documentation that the employer would require. As a result, employee does not have to consider a mileage reimbursement adjustment for the commute, that's what we talked about, to the office, because as it relates to mileage reimbursement, employer office is now the employee's home until subsequent events change such designation. So, no different. So let me end on this. No different than, what are we talking? We're talking about a home office deduction. Now that it's possible that a physical location is still available for your employer, but they're allowing you to work at home, and you have turned a square footage of your home into a exclusive and regular place of conducting business. If you have done this, and if you're an employee of an employer, and the employer changes there and has documented their HR manuals and guidance to employees that until subsequent events change, you can treat your home office on mileage. So especially with salespeople, outside salespeople, or anybody going to different office, traveling around to conduct normal business, the employer then is allowing the mileage to get reimbursed from an accountable reimbursement plan. If due to COVID-19 or the pandemic, you were forced as a Schedule C to re-engineer your business into your home office, which I had already been doing this, but every aspect is from home base, if you will, and you specifically have different areas of the home that you can say this is only what exclusive and regular place, and you have customers actually frequent with mask and all the protocol, which is what I do. So this turns into mileage from here. My business mileage starts when I leave the driveway, subject to other record keeping requirements, but that's how the business use starts for a car and truck expense on a Schedule C, or as in an accountable reimbursement plan for employee owner. Okay, there you go. There is a summary that is literally a summary. As I've shown you, that publication 587 is over 38 pages. It is voluminous. So go this way. If you're a record keeper, find out the business percentage in your house and add up all the expenses that relate to your home, and provide those to your accountant, your advisor, and you've got the good records, and you have those. If you're not a record keeper, simplified method. Take your square footage that you exclusively and regularly use for your business, or as an employee, you would submit those to the employer, or you use in your business, put it on line 30 on Schedule C for 2019 if you haven't filed, and that amount is $5 times to a max of $300 times, or $1,500. Okay, there's the home office deduction. You got the publication. You know where to go. Shoot me an email at mike@HiTechCPA.com. Visit our Facebook to like, and then actually if you can subscribe on our YouTube channel where this video is posted, Greatly appreciate it, because then I can bring more to you, like accountable reimbursement plans. What is that? I'll simplify it for you and tell you how that works. Have a great day. See you tomorrow.